And let's talk about Shriram Transport Finance, which has actually done very well. Seller showing from the company in the second quarter. The company has clocked in its highest ever quarterly disbursements, and net interest margins have expanded to 11-quarter high. And now we're joined by Umesh Revankar, Vice Chairman and Managing Director at the company. Umesh, great to have you with us here. Thank you very much for your time. Season's greetings from all of us here. Happy Diwali to everyone there. Appreciate you joining in. You witnessed your highest quarterly dispersals. Can this be maintained? Can this pace be maintained in the coming quarters as well? What are you seeing in this quarter so far? Or rather, what have you seen?
Yeah, thank you. Wish you a happy Diwali for everyone. Basically, the demand, credit demand, and also the vehicle demand, both are increasing. I believe the infrastructure is leading here because the infrastructure activity, infrastructure spend is creating a bigger demand. The construction equipment and construction vehicles, both are in good demand. Plus, the agri also is adding. The rural economy, even though there were a disturbed monsoon, the monsoon got delayed in northern belt, UP, Bihar and MP, but the late rains has given a comfort and assurance. So I think demand is from everywhere, both urban and rural, and the infrastructure is definitely leading the credit demand overall. So we believe this will be maintained for next couple of quarters. And this year we should see all-time high disbursement from our side.
Right. Do you want to put a number to that, Mr. Revankar? Normally you were doing dispersals of around 15,000 crores. That's gone to around 17 to around 18,000 crores odd. So you're expecting to maintain that sort of a run rate? And also, what about the margins that you make? Input costs are going up, and cost of borrowing is going up. What is the steady state number we should look at from here on?
See, if you look at our net interest margin, it is improved by 7 basis points over the previous quarter. So we are able to maintain our net interest margin in spite of increased the borrowing cost. We also have high liquidity. So that itself gives us headroom for improving. By reducing our liquidity, we can improve our net interest margin further. That is the scope we have. And we are able to increase our lending rate because our customers are loyal customers, and also we have a niche presence in our segment. We are able to pass it on to our customers. So up to 10 basis point, we can always manage increased liability cost. We can be managed. And also our liability book, if you look at, nearly 80% of our liability book is fixed. It is not floating. So immediately it doesn't get translated into increased cost to us in our book. So these are all helping us, and we should be able to maintain 7% net interest margin for the next 2 quarters also.
7% you said, right?
Pardon?
What did you say? How much will you maintain it at?
7%.
7%. All right, got that. Mr. Revankar, good morning. This is Sonia here, and happy Diwali to you. One thing I noticed is after many quarters, the disbursement of new commercial vehicles had gone up. For the longest time, it was just pre-owned commercial vehicles that were being disbursed. Is this a sign of a genuine pickup in the infrastructure activity? Because this is something we've not seen for a long time. And what kind of growth do you see between pre-owned and new commercial vehicles? What could the sustainable growth be?
See, basically, what happens is we acquire a customer for used vehicle, and some of them upgrade to buy a new vehicle, depending upon the economic environment and the cash flow expected. So right now, the cash flows are good for the customers. The freight rates are good. They're able to make good income out of their vehicles. So some of them are upgrading. In fact, the upgrade got delayed in last 2 years because the vehicle price went up by 25%, and that got delayed. And now people are upgrading their vehicle to new. So we are not targeting new customer per se, but our existing customer getting upgraded and buying new vehicle, and that's happening. The confidence in the people in buying new vehicle, which is almost double the cost of used vehicle, and the ability to pay higher EMI, that is increasing. So we do see bigger demand, and definitely, yes, the infrastructure spend and infrastructure activities are creating that kind of a demand. Even the real estate is doing quite well. So all these things are helping people to upgrade to a new vehicle. And we can certainly see in our book some of our customers moving and buying a new vehicle. So there, it may not tilt our book totally towards new, because it is now 90-10, and it will definitely remain at that level. But used vehicle demand is also equally good.
Sure, sure. And that's important, the point you're making, that, you know, the confidence to buy a new vehicle has gone up. That's the kind of demand traction that we're seeing, right, in commercial vehicles. But do you think that this higher inflation, higher interest rates are something that could dampen the growth going forward, or you don't think that would be too much of a problem?
I don't think interest rate will have a big challenge, because interest rate increase of 100 basis point will make a small difference. I don't think it will not big difference on customer, because as long as the market is good, economy is booming, the customer is able to pass it on. So a customer it all depends upon the economic activity, whether he'll be able to have increased income and able to repay his EMI. That's very important. So the increased cost of acquisition definitely delayed people buying new vehicle. But now it is getting adjusted, because after nearly one and a half years of increased price, now it is getting stabilized. It is not going, the vehicle prices are not further going up in the last 2-3 quarters.